You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good afternoon, Quasar Markets Live. So happy to have her with us today, because this is one of those days you definitely need to make sure that your mind is in the right spot and that you're emotionally set. Agnieszka Wood, how are you doing today?
I'm doing well. How are you, Howard? Good to see you.
I'm doing pretty well. You know, I sort of thought what we'd see has sort of played out. You know, one of the things you and I were talking about just before we came on that I think a lot of people sort of missed. And, you know, we talked about it here on Quasar, but I still think some people didn't understand. $4.7 billion entered the market in retail trades on Thursday. People bought the dip. And those people are the people that tend to have weaker hands. Unfortunately, because we know retail, that's what they tend to do. And so why are we still continuing to move to the downside, or why do I feel there's still a little bit more momentum to the downside than the upside? That would be my reasoning. So what is your takeaways on what's going on today right now?
Yeah, today was definitely interesting day. And I know that a lot of anticipation after Friday, how the market is going to open on Monday. Is it going to be, you know, drop and pop and buy the dip, and how far can we still go?
Right.
And what you saw this morning, this incredible momentum that we got upwards, that, you know, after whatever was happening over the last few weeks, seeing that pop almost reminded me of short squeezes that I got.
Oh yeah, it was. I mean, it was without a doubt. It was a short squeeze.
Yeah.
And we talked about it. You know, some of the best rip your face off, you know, rips are in bear markets.
Yeah. Yeah. So, you know, is it a sustainable move up? I personally don't think so. And I am more on the, you know, waiting for a confirmation, some sort of confirmation where I can feel confident, but everyone has to know for himself. But what I look at, and what I, you know, always talk from a perspective of a bigger picture is look at the momentum. What is the momentum right now? Because what you see is when you can follow the momentum, things get easy. And I think the momentum is still down. There is still a lot of fear, a lot of uncertainty. And if you are a trader, just go by yourself, just go inside and ask yourself, like, how do you feel? Like, in general, about your life at this moment. How much positivity is there, or is this a lot of uncertainty, a lot of questions? What is going to happen, whether you have a job or not? Are the prices going down? How am I going to put all these things together and, you know, make sure that I thrive? I think there's still a lot of uncertainty there and a lot of fear. And if you take that on a larger scale, what is happening in the world, that is the momentum, that is the bigger momentum. And we know that when there is a momentum, it doesn't switch like this, boom, and suddenly, yes, very short, temporarily, you can get those momentums. But if you're really looking for a more sustained move, you got to be aware where the momentum is. And depending on what type of trader you are, whether you're a swing trader or investor or a day trader, this kind of market is fantastic, right?
Right.
You know,
I was about to say, if you're a scalper, you love it. You know, when the move started this morning, you saw it jump through VWAP, you got long, you got in, and if you had a trailing stop, you got out when, you know, you made some great money. I mean, some of these things swinging rapidly. You know,
assuming you can follow that momentum, right?
Yeah.
Assuming that in the back of your head is not that you are not scared by the bigger picture, because when you are scared, then it's very hard to take profit from that momentum, right? Because you are getting yourself.
Or you're late to get in. Right now, you've got to be a little bit earlier. So it goes against sort of my trading theos, which is why I'm not trading early in the morning, is that I tend to want to see a little bit more confirmation. I'm a little bit more conservative that way. I'll give up 1 to 2% at the beginning to make sure that momentum is moving in my favor. So I might miss one of these rips like I did this morning, and I'm okay with that, because on the other side of it, if you were 5 minutes late to that rip, then you bought at the top.
Right. And that's exactly why I think being aware of the momentum itself and where you are, and also where is your momentum, is like just like in life. If you look how things are going in your life, whether they are happening for you, or sometimes people feel things are happening to you, that things are just not going the way you want it, that usually shows that you are going against the stream, that the momentum is one way and you are trying to go against it. And that's where things become difficult. And it's such a great skill to have and to develop, having the awareness of first where the momentum is. And you can see it, like the very first thing when you come to trade is, where is the momentum? And we call it a trend, right? How the market moving. But the momentum is really what counts, because that is what gives you the opportunity, the volatility that you need as a trader. Like how am I deciding how am I defining where the momentum is? And you can see it by the volume, you can see it by the price movements, and having that patience also to wait for that momentum to develop and seeing when it's changing. That's so important in this market, much more than anything else. Theories, what's going to happen, where is the bottom? No, that doesn't matter, because is it the bottom? I mean, it can always go low.
Right.
The question is, are you now trading with the momentum or against it?
Right, because you can do both. You just got to know what you're doing so that you can set the right parameters. You know, this is something you and I almost never do, but I am going to pull up a chart to show you something, because I think it explains, and I think you'll be able to walk people through it once I show it. I think we saw the psychology of the market a little bit today, and I'm going to use QQQ here, and I'm going to use the 1 minute chart, because what we saw a little bit of good news come in and this dip get bought up, right? And what we see, and you can see it today, this is normally seen in penny stocks, what I'm about to show. You saw the first upward move, okay? That's the first move. It stalled out, and we saw some consolidation as traders tried to decide, was this a real move or not?
Flag, like picture perfect flag.
Yeah. And then once you broke that former high, this is when I would have got in on a trade if I was watching this morning. And then at this point, I would have rode it for this run right up here, right? The problem is the psychology of the market, and you can see it by the volume. When did volume really pick up but still be green? At the end of the run to the top, right?
Right.
They get in, and then what happened once it went back down below this consolidation where those last FOMO got in? The huge red candle came in. Yeah. And then the other thing I'll point out, what happened? You got another bump. You always do. In fact, it's the laws of three. So ride 1, when you needed to catch it, was here. Ride 2, when you wanted to be on it, was here. Ride 3 was hope. And ride 4 was desperation. And it played out. And what it is it's that rule of diminishing returns. I mean, this literally is a textbook play as to the psychology of a trade, and where FOMO kicked in and where then the hope got respurred. But look, what happened is you really only saw the volume come when that capitulation came through in this spot here.
Yeah. You know, I think the interesting part of the psychology is that very first pop.
Yeah, absolutely is, because you got that first start, and I'll bring it back up for you to talk.
Okay. So when this bullish flag broke, and it was pretty much like, you know, the moment that it reversed is like, okay, where do I get in? The moment that you get all these green candles, even before the big pop, there is literally not much setup. It went really fast, not too much volume, but you know,
still low volume, like you're saying.
So then you see the flag and break on the high volume, right? So now you want to be in it. If you're not in it, you see the volume. And that's, I think, where for a lot of traders that are
New.
in that situation, they start, and they're relatively new, are thinking, oh, can it go higher? Right. So there are two camps. No, it cannot go higher. It has already gone so high. I cannot get in. And the moment that you see it's going higher, that's where you get at the end, because you think, okay, it is going higher. Let me get in. And then that is where it reverses.
And like you said, you can see it. The consolidation in that last level that got in was right in this spot right here, these three candles.
And then a lot of thinking is, okay, so it breaks this consolidation, which means another leg up, right? But you got to think by yourself, like, just looking at that move, how much potential do you still have so that you get on that consolidation to get higher? And I think this is where that greed and fear and everything start playing. And that's where people get sucked in, because they cannot handle that pressure. It's like, I want to be in it, but maybe it's not going to go higher. It looks like it's going to go higher. And it's just this whole mix of emotions inside their head after seeing like this. I've been there myself so many times. Now I'm looking at this and I'm like, okay, you take profit where, like, I don't expect to get out at the top. That's just first thing, right? But then also you can choose not to engage with it as well. Because what is it time frame? This is 1 minute. That's 1 minute chart, right?
Yep.
Depending on the time frame you trade, of course. Like me, I trade 1 minute and 5 minutes, but I usually don't engage with craziness like this. Like when I see it, I'm like, okay, that's great. Let's see if it's gonna hold. That's what I do.
Yeah. If I didn't hit it in this, then I'm not in. Then I have to wait it out. Like if you didn't get in here, and otherwise you're shorting it, and you're saying I don't trust the momentum, which is fine again. But because what it is the people that got in here and didn't sell out, it came back down, and it hit their spot again and went back up. So they went, oh no, I was right. So now I might even double in and put more money in this time, because now it's going. And then when it only goes halfway, which is right about what normally happens, this is where you see the big capitulation.
Right.
And this one's done a nice job, because it is accused of recovering. But normally this run tends to go to a level that then goes this way, which is what it has.
Assuming that those, the people who have bought it at the top, they got out, because there's a lot of traders who didn't.
Oh no, they're still holding a lot of them. Don't get me wrong. Yeah, no, they're still holding, because again, if they didn't get out before it dropped from 440 to 415, I mean, oof.
They're looking to get out. So when they see it reversing, they're like, okay, it's going. Now I'm going to finally.
This time I'm going to get in. Right. So they probably lost 2 or 3 times on this trade if you were overly bullish this morning based upon the setup. And that's why we do try to warn that, why we got to be nimble right now. Again, you could make money throughout this chart, this 1 minute chart. You could have made money 3 or 4 different times. It's just understanding what you're doing, trading with stops and take profits and things like that are going to get you. And then you would have won this maybe once, maybe twice, because again, I have no doubt there are traders that jumped in here, went in with a trailing stop when it hit again. And again, this is how I would have traded it. I would have said, oh, we're back at it again. I don't expect to go all the way up. But if I went from, 410 to 445, then I think I'm going to 425. And look, it went to 429. I would have just picking round numbers said. So when I was at 410 over here this time, I would have said, I'll rinse and repeat, but I'm only a set of shorter take profit this time. I'm not going with a trailing stop because I could give it all away. I'm going to put a take profit in at that part way.
Yeah. And for the newer traders, I would really recommend to watch the momentum, like how the momentum behaves, because usually there is some rest needed after the momentum. But when you think, like, you see this move and then you think, oh, it's setting up, it's going to be good again. It's like, it's not a roller coaster ride where you pay a fee and then goes the same.
Yeah, right. It's not always the same. If you look, it doesn't repeat itself in here at all. This was a setup,
Yeah, it was a wild ride this morning. And I said, to my people in Discord, I said, welcome to the market entertainment park.
Yeah, without a doubt. Now I have to ask, because you deal with a lot of high frequency traders, right? With folks that are funded traders that are out there doing this. Are they? are they what are you thinking is, what are you hearing out there? I'm hearing mostly to the end of capitulation. I'm not hearing a lot of positivity out of my trading friends.
Well, actually, I found something really interesting. So today, one of the traders that is funded traders, he said that on his funded accounts, he was actually very cautious today with the funded accounts because they have this rule that if you
Draw down a certain amount,
5%, not drawdown, but if the price drops 5%, then you cannot trade. So he was just like, it's 4 point something. I'm just gonna, with this volatility, it's very easy to cross that. I didn't even know that there was the regulation on funded account like that. But
it's
yeah,
just so you know, that is individual to each funded account. So each company you use for funded accounts has different rules.
Okay.
And what Agnieszka is talking about, I'm talking about, is they have circuit breakers. They don't want someone, they're giving you $100,000 to trade. What they won't allow is for you to get upside down with that money. So they usually have rules. You can only lose X amount during a day, or it shuts you off. It automatically liquidates your positions. So we just want to explain that, because a lot of people who aren't in that world don't understand the concepts.
So one of my traders, he said, I've been trading today my own account, and I actually, on one trade, I got 50% of the account. I'm like, yeah, that's not too bad.
Yeah, no, and I've seen it. This is exactly and that's what we're talking about. You're going to see some of these rip your face off. If you got in on TQQ, on an option, on a naked option at the open, then you cleaned up. And I've seen some social media for it, you know what I mean? Some other things where people absolutely did, that, again, if that's how you trade, then that it's there. But you don't want to just all of a sudden decide to start trading like that.
Yeah, and it's I think it's very easy to lose sight of what is of the bigger picture always, and especially when you have moves like this. I also hear a lot of people like, oh, I couldn't trade on Friday, I feel like I missed the opportunity of a lifetime. I'm like, man, just that's such a
that's what scares me today, is people and that's what happened in that rip your face off. People, oh no, I'm going to miss the bottom. Relax. It isn't going to happen in 1 minute. Now, don't get me wrong. If they did pull tariffs off, or if something that big comes, I just was I'm of the certainty that the uncertainty is remaining.
And that's exactly my the point, because you are always in that uncertain environment, and right now there's just so much uncertainty, and it's growing. It's like the bigger the mass, the stronger the momentum.
Right.
And even by turning suddenly the turns upside down, it's not going to turn that uncertainty 100%. So now, the world is saved, because those tariffs were on and off, on, off, on, off.
Well, that's the other part, is traders are so on edge that even a rally like we saw that was 4 or 5 percentage points in a matter of minutes is going to sell off at the first scared buyer. So
because of the momentum, because of the uncertainty that is there, like, is it going to hold, or like, I better get out when I can at the high, because who knows? And that type of attitude, I think, is still predominant right now, to feel like I better get out and don't take the risk, right? So and that's what you see in those sell-offs. So if you're stuck in your position because you didn't sell, because you didn't have a stop, it's great to have a rally, but make sure that you are aware of, like,
I need to sell now. But that's exactly what worries me too, is, again, people that were on the wrong side of some of these trades didn't have a stop loss, and now say, well, I'll just wait it out. Understand, there could be more 10, 15% to the downside. Let's face it, if things don't go the right way. So the market's going to be, it's going to be an interesting market. I mean, for traders, it's a lot of fun. There's a lot of volatility. There's money to be made. I think we're all saying the same thing. Just be very, very sure of what your trade is. Automate all the pieces that you can.
Yeah.
is a big part, because things are moving on tweets. They're not moving on technical analysis. So you have to have your self protection. We call them market condoms. Make sure your market condoms are in place. That's your stop loss and your take profits. Is quite honestly, it's important to have them. And I know traders are going to come on and they're going to say, well, I don't do that because I get stopped out every time, and they hunt out your stop losses. You're right. If you're a big trader, they don't do it for your $100 trade on NVIDIA.
Yeah. Following your metaphor, the fact that the condom breaks doesn't make you not wearing a condom.
Yeah, right? There you go. That's the way to go. Agnieszka, I know we both are very busy today running around. I got to get you out of here on time. What are the last words for today for us?
Have some grace for yourself. Be disciplined, but if things go wrong, just don't beat yourself up. I mean, it's not an easy market to trade for sure. And I think there's a lot of fear in general. So if you're not sure how to trade market like that, just stay away and watch it and learn, make notes. The market will be there.
You just nailed it. That's exactly. You saw what I already looked at the Qs. I've been watching that all morning. I've been putting the levels in. I'm looking at it. Look at those things. You don't have to trade it, but watch what it does. How does it react? When you saw that first euphoria run off, how far back down did it come? Because that will start to show you history repeats itself in the stock market all the time.
Just because people are so predictable.
Absolutely. We are. So, well, thank you so much. Like always, Agnieszka, we will have you back again. I know we're not going to be together on Wednesday, so we'll have you next Monday. Have a fantastic week. Enjoy the Masters. I'll be watching it this weekend for sure.
Yes, absolutely. Thank you so much, Howard. See you next week.
Thank you.